Three things to know about the housing market in October is rates are staying low. This is the best time to be a buyer, and the government shutdown is not going to affect housing in the way you think. Hi, my name is Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our October market update. So we are officially in Q4. I cannot believe it. We are headed into the fall season. Halloween's around the corner, Thanksgiving, Christmas, so holidays are almost upon us. And so what does that mean for the housing market? Well, traditionally in Q4, it is the best time to be a home buyer. The homes that are on the market have either didn't sell during the spring and summer season, so they're aged inventory. Those sellers can be a little bit more motivated. Any new listings that come to the market tend to be some sort of forced seller. Not that they're necessarily in financial distress, but that could be forced due to death, divorce, job relocation, those types of things where somebody is needing to list the home during the holiday season, so they could be extra motivated. So as buyers are concerned, you tend to get your best deals, but have the fewest amount of choices overall during the Q4 timeframe. So where are mortgage rates? Well, mortgage rates are finally in the low sixes. For most of this year, we were in the high sixes, low sevens. So we have finally seen the 10-year Treasury come down, and it's staying lower, which is good. So we're on the low end of where the 10-year should be at, and that has impacted mortgage interest rates in a positive way, keeping us in the low sixes. You can even get some loan products, ARMs and things, that are going to be in the mid to high fives. If you get a seller to contribute towards your closing costs, which they still are, you can absolutely do some rate buy downs and pay some points where you can get a much more favorable interest rate as well. And if you're shopping for new construction, a lot of the builders are offering rates in the high fours. So they're really offering a lot of incentives to get those buyers in the door. So it's a much more favorable rate environment. And I think unless there's some sort of external force on the markets, I think we're finally at light at the end of the tunnel. We have tested these numbers before, and they've always retraced and bounced back up. I don't think that's the case right now. I think that we're going to stay in the low sixes. Hopefully when we get into 2026, we start to breach the low sixes and get into the high fives. A lot of that is going to be based on what the job market does, and the job market continues to soften quite a bit. So the last report that came out was negative. Right now, we are in the midst of a government shutdown. We're supposed to have jobs announced this week, which we will not if the government continues to be shut down. But we did get the ADP report, and that was negative by quite a bit. And so I think that really cements in that the Fed is going to do another 25 basis rate cut this month. But I think that a lot of that is already baked into where mortgage interest rates and where the 10-year is right now. So the 10-year is really going to react. If we continue to have negative jobs reports, it's going to go down. If we have really positive economic news, then it's going to bounce up. So anything negative means interest rates will come down. Anything positive means that interest rates will go up. So with that being said, with the government shutdown, how is that going to impact housing? Well, historically, it doesn't really have a huge impact on housing. People are still going to get their FHA loans. VA loans are still going to be issued. They might slow down a little bit, so your closing dates might get pushed out some, but it shouldn't really have too big of an effect on the housing market. If people aren't working, that are in government jobs, maybe they can't buy homes, but that's going to be a super low percentage overall. So with the government shutdown, depending on how long it lasts, we shouldn't see too big of an impact on the housing market. Where are we at with sellers and inventory? Well, we are just really staying kind of in that sub 20,000 active listings on the market. It hasn't really dropped a ton, hasn't increased a ton either, but we have seen the level of demand pick up slightly due to the lower interest rates. So we have positive year over year indicators for people applying for mortgages and purchasing homes. So the numbers are much higher this year than they were last last year. In fact, we're seeing if you list your home right now, you have a 70% chance of actually selling, which is a good number. We've been hovering in kind of the mid 60% range. So to be much closer to 70% chance of successfully selling your home is a much better place to be in. Now, the market that is performing the best in the greater Phoenix area is that 300,000 to 400,000 range. So those have a very high likelihood of selling because that tends to be, or at least it was for a long time, kind of the average price point. Right now, the average sales price for a home in Phoenix is closer to $450,000, but that 300,000 to 400,000 range, there's a lot of active buyers looking in that market. So if you do list in that, you may have to do less to get the home ready to sell and expect to see a bit more traffic through the property. If you're selling in this market, I've been preaching for a long time that it comes down to price, presentation, and patience. I'm having conversations with sellers that are getting a little antsy, but they're only 30 days on the market. You got to have patience to sell your property. This is not necessarily the market where you list the home on a Thursday and have contracts by Monday. It does still happen, but it is fewer and far between. So if you're in a higher price point, you're trying to maximize your return, expect longer days on market, especially as we get into the holiday season. Pricing your home maybe below where the most recent home sold at would be the move, and then making sure that it is presented really well as it can be in terms of its overall condition. If you are on the fence about doing some sort of repair or paint or cleaning, do it. Those things matter. Buyers are buying, but they are extremely picky on what they are purchasing. And then be prepared to negotiate and still need to help in terms of closing costs and concessions to help those buyers with their overall purchase. That is still very normal right now. As I mentioned during this Q4 timeframe, a lot of the sellers are forced sellers. So navigating estate and probate, having a family member who passed away and those people are having to list the home. I'm actually going to be doing a lot of videos surrounding that. It's something that we specialize in. So if that's something that you are interested in, definitely subscribe and like our channel because I'm going to be putting out additional content surrounding those types of homes. And what can buyers expect as we head into October and the end of the year? Kind of more of the same, except there's going to be less choices on the market. I suspect that we will see inventory fall as we get into the holidays, but if you are an active buyer in this market, this is your time. This is when you're going to get the best deals. You can negotiate with the sellers, get repairs, get closing costs. So look at the days on market. Some of that aging inventory, those sellers can be a little bit more motivated. Have your agents call the listing agents to find out what's important to the seller. Oftentimes they'll let you know kind of what the motivation is and what they're looking for. Is this an estate type situation? Is this a divorce? Because then you can kind of parse out that these sellers are in a position where they really need to sell, and you can probably get a better deal on that as well. So this Q4, as we head into the fall, is a really opportune time if you are not extra picky. If you're extra picky, then it might be better to wait until after the first of the year when we start to see inventory increase, but just remember you will also have more buyer competition as well. So it might be advantageous if you're buying in this market, if you've been looking at properties and some of them have been a little bit outside of your budget and those properties haven't been doing price reductions, maybe taking a swing at it and seeing if those sellers are going to have a conversation now. If you submitted offers and those sellers were just like, no, reach out to that agent and find out, has the seller changed their stance? I'm still interested in the home and still shopping. I always say, it is better to write the offer and make the attempt and have the seller say no. Nothing bad is going to happen to you, right? They're just going to say no. So it's always better to try and have them turn you down than to not try and always wonder. It is always worth your agent's time to write and submit an offer. Obviously within reason, you're not going to get something hundreds of thousands of dollars marked down. But if it's, something is listed at $450 and you can qualify up to $430, that seems fairly reasonable. So I always recommend take that swing, see what happens. Worst case scenario, they say no. Best case scenario, you buy a house. Thank you so much for tuning in. This has been our October market update. If you have any questions, leave them in the comments below and don't forget to give a like and subscribe.